Wall Street Journal's Nick Timiraos and Financial Times' Kobe Smith, they put out news articles on September 12th and 13th, which is last week, to remind the market that not to forget the probability of a 0.5% rate cut in the upcoming September meeting. Before their article, the market was pricing in a larger than 50% chance of a only 0.25% rate cut. But after the article, the chances become 50-50 in terms of whether the Fed will cut 0.25 or 0.5%. Just a reminder that the rate decision will be released tomorrow on September 18th. But what's very interesting is that yesterday on September 16th, we're seeing two opinion pieces released by Bloomberg and Wall Street Journals. The opinion piece shared on Bloomberg was by Bill Dudley, who served as a president of Federal Reserve Bank of New York from 2009 to 2018, who was also the vice chair of the FOMC. So below are the main points brought up in his article. He spent a good chunk of the article supporting the 50 basis point cut. He said, both price stability and maximum employment, which are the two mandates of Federal Reserve, are balanced, meaning that monetary policy should be at a neutral level, a neutral rate. But current interest rates are still far above the neutral rate and need to be adjusted quickly. Okay, so give you a little bit of background. According to the latest dot plot, Federal Reserve FOMC members believe that the long-term neutral rate should be 2.8%. Okay. And he said unemployment rate has risen to 0.8% since January of 2023, with slowing job growth and wage inflation below 4%. And he said historically, when unemployment rate rises beyond a certain point, a recession follows, indicating downside risks for labor market. So he's saying some rule has triggered. Okay, and he said a 50 basis point cut aligns better with market expectation of at least 1% total reduction by 2024, avoiding a hawkish signal. Right? If the market expects you to cut 1%, you cut only half of it, it's telling the market you're more hawkish. Okay, and he also gave us a list of arguments against 50 basis point cut. He said the final interest rate level matters more than the speed of reduction. So he pretty much said it doesn't matter. What matters is the terminal rate, where your final target of the rate will be. And he said the Fed wants to ensure inflation is fully under control, avoiding past mistakes, right? Like the 1980s, where the inflation kept on flaring back up. And he said the economy, while slowing, is not showing strong signs of recession, with GDP growth projected at 2.5%. And he said a smaller cut would prevent political accusation of favoring the current administration. Of course, we're heading into a presidential election, right? But as a conclusion, the author's key takeaway is that he supports a 50 basis point rate cut. He believes that Chairman Jerome Powell will favor an aggressive approach to neutralize current tight monetary conditions. On the other hand, at Wall Street Journals, we have this opinion piece from Greg Ip, who is the chief economics commentator. He's the main idea of the article is that, well, as you can see from the title, you should cut by half. So he's pretty much saying, I support 50 basis point. But the reasoning he lists, I'll give you the list of reasonings he presented in the article. He said some key inflation measures are now below 3%, closer to the Fed's 2% target, and the labor market has cooled, lessening the need for recessionary action. Right? You think being hawkish is a recessionary action. There's no need for that. Inflation victory is near, with year-over-year CPI falling from 3.2% a year ago to 2.5% in August. He's talking about the total, the headline CPI. And he said the core inflation is estimated to be at 2.7%. He's talking about PCE now. Okay, he was talking about headline CPI being 2.5 year over year. The core PCE for August haven't released yet, but estimated to be 2.7%, which is getting very close to the 2% target. And he mentioned that the oil price has dropped from $83 in early July to below $70 on Friday, further reducing inflation pressures. And according to a study, oil price change can explain up to 16% of core inflation fluctuations, and it will take up to 2 years for 80% of the effect to show up, right? You see, even though the core is at 2.7, right? We're seeing oil price going down. It's gonna eventually affect the core as well, okay? According to inflation-linked bonds like TIPs and derivatives, investors project CPI inflation at 1.8% in the next year and 2.2% over the next 5 years, showing confidence in the Fed hitting its target. And he also mentioned the same thing about we're being too far from the neutral rate. And he said labor market has cooled with unemployment rate rising from 3.5% to 4.3%. Before ticking down to 4.2%, job vacancies are fallen, wage growth is expected to slow. And he also mentioned the inverted yield curve suggests market believes interest rates should be lower. And he said Fed risks moving too slowly if it cuts only by a quarter point or 0.25%. More weak data would leave it behind the curve as it did in July. Right? July had a job market, non-farm payroll data that's weak. People think the Fed is behind the curve, and if they are going 0.25, we get another data. Everybody's going to point their finger at the Fed and say, you're way too behind. We told you were behind, you're not catching up, and you're still behind. Okay? Maybe you're even further behind. Okay? And political considerations regarding the upcoming election may be seen as a factor, but Fed Chair Jerome Powell insists on economic judgments free of political influence. So he's saying even though he might feel pressured for 50, but go for 50. You do what's right for the monetary policy. Okay. And right now, after their opinion pieces, of course, the probability is no longer 50-50. Okay. The probability of a 50 basis point rate cut has now risen to 63%. And what's more scary is last night it was at 67%. Okay, so to me, right? Oh, sorry, and the 0.25% rate cut is at 37%. This is from Fed's futures derived probabilities. So to me, Federal Reserve is really trying to get the market ready for the 50 basis point rate cut because this Federal Reserve is known to use media to steer the public perception. So I think everybody should be ready for this sort of rate cut movement tomorrow in a day. Okay, September 18th should be 2 p.m. Eastern time. Okay, please don't forget to like and subscribe. Thank you.